What is up, my investors? I hope you guys are having an awesome day today. Today I'll be talking about the stock market for beginners. Thumbs up if you think I earned it. Without further ado, let's get this going. All right, guys, so what are stocks? Stocks are ownership in a company that entitles you to a stake in the company. The goal is to make profits by buying low and selling high. As you can see at the chart, the red line is the resistance. That's where you want to sell your stuff, your stocks. Whereas the support is that green line. So bottom of the graph is when you would ideally want to get in the stock. Essentially, it's, buying stocks at discounts and selling it at a higher price to make profits. So how to make money? In the stock market, there are two different ways you can make money. First is by asset appreciation, where you purchase a stock and hopefully sell it at a higher price in the future. Second way to make money is through dividends. They're payments made by a company to shareholders just for owning their stock. So if you want to get some dividend ideas on what stocks to get, check out this website at seekingalpha.com/dividend/dividend ideas. So essentially, let me dive more deep into this. Companies, they either have that do dividends, or because the companies, they want to invest in their stockholders just for owning the company. Whereas some companies, they do not have dividends because they want to use that money to reinvest it back into the business to make the business grow faster, stronger, so the value of the stock rises. If you look at, Amazon, Tesla, these big growing stocks, they don't have dividends because they reinvest their money to make the business much better. So now we're going to talk about bullish versus bearish. You'll hear these terms a lot as you dive deep into the stock market and investing. So essentially, a bear market means stock prices are falling, and a bull market means investors are confident, which indicates economic growth, or otherwise the stock market is rising. Now we're going to talk about valuation. Essentially, if you have two stocks that are same price, it doesn't necessarily mean their value is the same. So anyways, valuation is the value that the investment community gives to a particular equity or business. In other words, overvalued stocks cost too much, undervalued stocks cost too little. So I'll give you an example. An overvalued stock, I believe, is Chipotle, which was at the time at $1,003.91 per share. And an undervalued stock, I believe, was Dell Technologies, $49.64 a share. So you tell me, Chipotle is pretty much like a fast food restaurant. You really think a share of that is $1,000, whereas, Dell, a computer company, been in business for a long while, is only barely even $50 a share. To value stocks, you have to look at the strength of the brand, the quality of the company, the overall performance, and future potential. The price to earning ratio is the value of a company that divides current shares price to its per share earnings. You can see by the equation, share price divided by earnings per share equals the PE ratio. You'll hear this ratio a lot. You find a high PE ratio, usually those stocks are growth stocks. And if it's a lower PE ratio, those stocks are more of a value stock. There's three different trading strategies you can get into. They are day trading, swing trading, and long-term investor. So day trading essentially is buying and selling a stock the same business day. And then swing trading is pretty much you buy one stock now, you can hold it, for like a day or a couple weeks, and you sell it to make a profit. Whereas long-term investing, you buy a stock, cheaper price point, early in its development, ride it out, and bam, your stock price, the stock value gets real big. Think about like Amazon. Those people that got Amazon during the IPO, which is the initial public offering, were pretty cheap compared to what the price of Amazon is now, which is over $2,000 a share. So my top 5 tips for you investors are: first is invest in large and profitable companies. So think about brands that you use every day. Those are good brands to use because keep using those brands, like those brands won't go out of business. My second tip is to understand valuations of companies. I dive a little bit into it, but if you guys want, I will make another video on finding valuations of companies so you can kind of determine which stocks are undervalued so you can buy those stocks. And once they do get, the right price point, you can make profits off of it. My third tip is invest for the long term rather than short term. For me, I do both long term and short term investing. I have different brokerages that I use specifically for each investment style, and it has been working for me. Fourth tip is diversify your portfolio. And tip number 5 is, as Warren Buffett would say, be scared when everyone is greedy and be greedy when everyone is scared. So I'll let you kind of incorporate that into your mind and whatever you perceive it as. ETF and index funds you can trade. They essentially track the market but can be specifically used for growth or innovation or dividends. They offer more diversity and they are more passive. ETF stock that I've been trading, or multiple of them, are ticker symbol UGAZ. That's UGAZ. Ticker symbol DGAZ is ticker symbol DGAZ. And they follow ticker symbol \NG, which is natural gas. So typically ETFs are pretty volatile. A lot of money, or you can make your profits go away. If you want, I can make another video on ETFs and how to trade them. Just comment below ETFs. So where to buy and sell stocks. So essentially you can buy and sell stocks from brokerages, and those brokerages, actually most of them have apps. Different brokerages I use ROBINHOOD, WEBULL, TDAMERITRADE, MOOMOO, M1, SOFI, SCHWAB, FIDELITY, and BETTERMENT. I recommend all of these brokerages. Below I'll provide a link where we could each get a free stock just for referring you, my investor. Actually, I'm introducing you to the brokerage, and the brokerage is going to reward both of us with a free stock. 3 myths about stock investing that I believe you should understand that typically are not true. Myth number 1, you can't invest unless you have a lot of money. This is simply not true. I believe anyone can build a strong portfolio if they adopt a long-term approach to investing. So you can start off with just $100 and you can slowly trade each and every day, buy the dips of stocks and sell it at a high price point, and you'll make profits and your brokerage account will just continue to grow. Myth number 2 is stock market investing is too complex. Initially, I feel like everybody's going to think stock market investing is too complex. But, like everything in life, there's always going to be a learning curve. And once you get past that learning curve, you'll really see that stock market investing, especially with these brokerages that you can access on your phone and the multiple videos on YouTube you can watch on how to use these brokerages, make stock market investing so easy. Myth number 3, investing in stocks is like gambling. In a way, if you don't know what you're doing and you just buy random stocks and you sell them at random times, essentially that is gambling. But if you do your due diligence and you understand that there are risks involved with investing in stocks, and that you make sure that you have money set aside to invest and to pay off debt and whatever you need to pay off monthly, then investing in stocks won't be gambling. It will be investing. And when you invest in something, you know, you'll get something out of it. So hopefully you guys do your due diligence and make the best out of the stock market, because you truly can make money. And so the stock market can be manipulated by multiple things. And one of the big things right now is that's manipulating the stock market is politics. Politics, they can have a huge impact on the stock market. For example, in late 2018, America and China were at a trade war. This resulted in a bear market in China because of the massive impact trade war had on America and China. There's many things that can manipulate the stock market, but if you watch like the news and you see like companies that are in the stock market that have, you know, positive news on like CNN, then you'll start to see the stock will rise a little bit during the day by maybe like a few percentage. And if there's like bad news on the stocks you hold, sometimes the stock will take a dip for the day or for a few days, and essentially the stock will go down in value.